and welcome. Today, we're jumping into something that is absolutely fundamental for any SAP materials management consultant. We're talking about how SAP numbers, material, and accounting documents. Now, this might sound a little technical, but trust me, this is the very backbone of a clean, auditable system. So, let's get right into it.
So, I want you to just picture this for a second. A truck backs up to a warehouse, a pallet of stuff gets unloaded, someone scans it in, and it's put away. On the surface, it seems pretty simple, right? But in the world of SAP, a whole storm of activity just got triggered behind the scenes. In this explainer, we're going to pull back that curtain and show you the digital paper trail SAP creates for every single one of those movements.
You see, every single goods movement in SAP generates two critical documents. Think of them as the two main characters in our story today. First up, you've got the material document. This one answers a very simple question. What moved? It's the official log of the physical transaction. And right there with it, you have the accounting document, which asks, how much was it all worth? This one, of course, tracks the financial side of things. Two documents, two different jobs, all from one single event. All right, so here's our game plan. We're going to start with what I call the transaction's digital footprint. Then we'll look at how both the material and the accounting documents get their unique numbers. I've also got a fantastic pro tip for you consultants out there, and we'll wrap things up by looking at a couple of special cases. By the end of this, you'll have a super clear roadmap for this crucial piece of configuration. Okay, let's dive in. The very first thing SAP needs to figure out is what kind of movement just happened. Was it stuff coming in from a supplier? Was it a transfer between two warehouses? Or maybe goods being issued to a production line? Every single movement needs a unique identifier, and in SAP, we call that a transaction or an event type. The easiest way to think about a transaction or event type is to imagine it's a specific rubber stamp. Yeah, really. When goods arrive from a purchase order, the system pulls out its goods receipt stamp and bam, marks the transaction. If goods are being sent out, it uses the goods issue stamp. It's this simple, unchangeable internal code that tells everyone exactly what went down. And what's really cool is we can see the most common stamps you'll be dealing with right here. Seriously, as an consultant, you are going to live and breathe these codes. The two big ones you absolutely have to know are WE for a goods receipt, that's stock coming in from a PO, and WA for goods issues and transfer postings. Knowing these is just fundamental. So the system has now stamped the transaction, it knows what happened, but how does it create a unique ID, that one-of-a-kind reference number? Well, that brings us to the material document number, the permanent record of that physical movement. Now, SAP could have let you create a different number sequence for every single transaction type, but can you imagine the chaos? That would be an absolute nightmare to manage. So the smart strategy, the one SAP uses, is to group similar transaction types together. So maybe all your goods receipts share one number range, and all your goods issues share another. It just keeps things so much more organized and logical. And this just perfectly shows you the logic happening behind the curtain. And get this, it all happens in a fraction of a second. It's like this four-step dance. A movement gets posted, the system instantly sees that we type, it quickly checks the config to see which group we belongs to, and finally, it just grabs the next number in line from that group's number range and assigns it. It's simple, it's fast, and it's completely foolproof. Okay, so we've got the physical side, all tracked and numbered. Now, it's time to follow the money. Remember, if a goods movement has any financial value, it has to create an accounting document. And just like its partner, the material document, this one needs its own unique number from its own special sequence. So this right here is the crucial point. This is that powerful direct link between the warehouse and the finance department. The transaction type, RWE for a goods receipt, directly triggers a corresponding FI document type. And in the standard SAP system, a WE, goods receipt in creates, you guessed it, a WE document in finance. The two sides of the house are speaking the exact same language. How cool is that? And don't think for a second that this FI document type is just another label. Oh no, it's an incredibly powerful control key. It dictates exactly what kinds of accounts can be posted to. Things like asset, material, or general ledger accounts. It even controls how things like cash discounts are handled. And it can restrict who is even allowed to post these documents. This is a critical control point for the entire finance team. All right, let's talk about something that every consultant runs into. It's a bit of a challenge. See, these number ranges for both material and accounting documents are usually tied to the fiscal year. And what that means is that every single year, somebody has to go into the system and set up all the new ranges for the new year. It's tedious and it's repetitive. But there's a trick, and this is a fantastic pro tip that comes straight from the experts. If you don't want to go in and create new ranges every single year, you simply create your number range interval and you assign it to the year 9999. That's it. SAP will then just use this interval continuously year after year after year without you ever having to touch it again. It's such a simple entry, but it can save you and your client hours of work at every year end. A real game changer. Okay, before we wrap things up, I just want to quickly touch on two other things in inventory management that also need their own number range configuration. We're talking about reservations and goods receipt/issue slips. So the good news is numbering for reservations is way, way simpler. A reservation is basically just a request to have material ready for you at some point in the future. For these, you only have to configure one single number interval. That one range is used for all reservations, across all your plants, for the entire client. Nice and easy, right? And then you've got these things called goods receipt and issue slips. Now, these aren't always used, but as this quote points out, sometimes they are an actual legal requirement. In a country like Italy, for example, the law says you have to have a printed slip with a unique number that travels with any goods being transported on public roads. So in that case, configuring this number range isn't just a good idea, it's a matter of compliance. And that brings us to our final thought for today. We've seen how a simple goods receipt kicks off this whole chain of documents, each getting a unique number from a very specific range. It might seem like a small detail in this massive system, but I want to leave you with this question. After seeing how all these pieces connect, how could a single mistake in that number range configuration, maybe a duplicate number or a gap in the sequence, how could that one little error ripple through a company's entire inventory valuation and its financial reporting? Getting this right isn't just a technical task. It's absolutely fundamental to the integrity of the entire system.